All right, traders, welcome to today's market recap. This is Christian from Tropic Trade Group, and this is your stock market recap for Wednesday, June 12th. It kind of feels like a Thursday with all the events. I felt like for a second there, I was like, hey, we just have to get through one more day of the week. But just I think that's the reason why I'm thinking that is because there's a lot of events today. Clearly, you had the CPI. It kind of felt like two different days or yeah, basically 2 days packed in one with the CPI report and the and Powell speaking with the Fed meeting. And there's Broadcom rallying after hours. They just announced a 10-for-1 stock split, so very interesting. So let's talk. So let's kind of take this in two parts, and again, I'll go through this. I'll try to go through this really quickly. But economics. Just to kind of leave off where from or start from where I start from where I left off yesterday. CPI report. I don't really get some of these things. How this occurred. It's almost like somebody knew that CPI report was going to come in pretty low because they really dialed down the expectations of zero point 0.1. And I went over this in yesterday's video. I won't rehash the whole thing, but basically, it's the first time that, all year long, these reports have been like zero point 0.3 and zero point 0.4. So I don't know how they knew that the report was going to come in light. Maybe there's some type of seasonality. I don't know. But regardless, it does show inflation is ticked down. That kind of, set the stage for Powell speaking today. And, basically, I don't think we heard really, in my opinion, much new from Powell. I thought it was kind of right in line with expectations. He mentioned very general statements from him. So some people have their own opinion about whether he was hawkish or dovish, but I think that he basically said, hey, it's good to see this inflation report come down. We need to see more. And he mentioned like the job market is pretty good. And, like it's a lot of like the general statements, like he mentioned something about like the housing market. He's like, yeah, the housing market's complicated. Yeah, absolutely. So, the other thing was we've heard so many of these Fed speakers they've dialed down the expectations of, where we were 3 months ago, right? And that was some of the statement that came out was like, yeah, back in March they were looking for three Fed cuts. Well, that was 3 months ago. That's old information. So, yeah, odds are they're just probably going to cut interest rates one time this year. Does it really make that much? I've said this all year long. Does it really make that much of a difference if they cut interest rates 25 basis points from where they are now? Maybe there's a psychological factor, but no, it's not going to matter. 25 basis points is not going to matter that much. And I hate to break it to all these people who are either looking for a cut or not. And by the way, like the other thing that I keep mentioning too is why the hell do we need one? If you look at where if you're thinking like equity, oh, we need a rate cut for the stock market. No, you don't, because S&P is at new highs. Qs are at new highs. Now, maybe you could argue for some areas of the market, like the small caps, which have been underperforming decently. Where are the small caps year to date at this point? Small caps are basically up 1.5%. So yeah, if you're like a big small cap fan, maybe you want to say like, hey, you need a rate cut for that, because you're only up 1.5%. But there are plenty of other things going on in this market with the Qs up 16%. So please, you know, that to me is a bad argument that you need rate cuts at right now at this given time. I don't think you do. I think what keeps the market at bay is to talk about the will we, won't we? It goes back to like what we had a couple of years ago with trade talks are going well, right? And that would keep the market, at bay or like in an okay stance, and then the market kind of does what it wants to do. So Qs are up about 16% now year to date, and that's leading S&P up 14%. I mean, that's one heck of a half of a year, and we're not even done yet. So I think overall the message for the day is good to see the inflation come down, and I've already said what I think about the possibility of interest rate cuts. Very interesting to see how these gap ups that you have with these events. It's very interesting how this has been going because obviously. no one knows with certainty unless you're given some type of information about how these reports are going to go. So there's event risk, and each time we seem to be getting, or recently, each time we seem to be getting to these event where the market does move. So you can't like pretend like the market doesn't move. The market gapped up huge. Like small caps were up, gapped up 2.5% on the open. So I see every once in a while some what I refer to as shtick on Twitter that people think these events don't matter. Okay, well, look at the price action. Sure, they do, right? It's to see small caps go up, 2.5, and I think at one point up 3% for the day. Of course, it matters, and it gives you trading opportunities depending on what side you feel like, playing. But you kind of have to be in some of these trades to participate. And the way that I came into today and um, you know, basically my strategy was to kind of to come in with positions. I reduced a couple positions at the end of the day yesterday just to make sure I was where I want to be. I took off some of my least favorite trades, but I've got just a bit over 10 swing trades on, so that helped me a lot. And was able to be a net seller today, which is always what I like to be on gap ups. And that worked really well. I added a couple starter trades today, and they really didn't work for me. But what powered me through is to have the existing trades on. And so at one point, if you look to see like percentage, this is really interesting on days like this, percentage change from the open. And what was amazing to me is what tech and what the semis did today. They continue to charge higher. I think that's the right adjective to use, is that they're the best performers from the open today. So that's where the strength has been, and that's where it continues to be. Really impressive. And I've talked a lot about market breadth, but I think, as I mentioned in yesterday's video and probably the day before that, is that if you're a growth investor, if you're a tech investor, you are not complaining at all about this poor market breadth, right? And some of these things you could see a lot of fades. So for example, very strong to see like the performance for IWM 1.5%. But if you try to do anything on the open, right, this fell 1%, right? Also, look at what the Dow did. The Dow finished in the red today. Just amazing to see the concentration of strength is really in that tech group. And as I mentioned in yesterday's video, a couple other small places. I mentioned the solar group. Solar still finished up 1% for the day, but that's underperforming a little bit, what the Qs did. But look at it sell off, right? So some of these things, you know, in my opinion, you have to be more of a trader, and understand that some of these things are going to rip, but they're going to give it back at some point. And TAN, the solar ETF, was your worst performer from the open, down 2.6% today. Now, again, I took profits. I've been long for solar, and I've now taken 4 targets in that trade. So I sold again into strength today, and that worked out really well for me. And I'm sitting with like the last 10-15% of the position. Apple, Nvidia. So these were interesting moves. Let me start with, of course, just the S&P. A little bit of a wick there, but again, like, I don't think there's not really too much to complain about that chart. We're full on breaking out, and you could probably say a little bit extended at this point. What's the RSI at this point? The RSI is approaching overbought. I think it's right around a 70, right? And here's the leader of this market through and through. You got a gap that you got to deal with there in the Qs, and the Qs I think is overbought. So that should kind of help with your risk management a little bit. Taking some money off the table, right, and being having some flexibility, because the Qs right now, the RSI is a 76. Right. And then lastly, just to kind of round out the indices, the IWM, okay, nice move, right? No breakdown, no going lower and taking out this VPOC, making a higher low, but right into resistance, right? And still very difficult, right? I think a very difficult looking chart. The turns happen quickly in this, but sometimes there's just no follow through. And overall, if you're looking left to right, right, it's mainly sideways. So, in my opinion, and again, like if you make money in this, congratulations to you, but you're going after something really difficult, right? And I get it. It's fun when people make money in something really difficult because you feel like you conquered something. But same thing with the diamonds. This has gone complete sideways for the last 3, 4 months. In my opinion, nice trending trades is where you make your money in this market, sticking with the market leaders. I hate that this candle's in here like this for Nvidia. It kind of screws up the chart a little bit, and I don't know why I can't do this again. There we go. Um, all right. So again, somebody told me in yesterday's video how to zoom, and I'm sorry I didn't take a look at it. But yeah, I mean, these are the things trending like this, going, sticky, just continuing to make new highs, right? In my opinion, like this is for market leadership where you want to be. Notice what this did. I was getting not worried, I would say, but I was like, oh, let's see if this thing can close above the value area, and it did. And look at where this thing is at 126. I remained long. I did take a little bit more off today into the strength, up 4 or 5%. I'm going to slice a little bit off just in case. And if it does, happens to start down tomorrow or something, then um, I can always add back that slice. That's the name of the deal. So that's Broadcom. Overall, the whole semis. I'm sorry, I'm looking at a Broadcom headline. That's Nvidia. Here's the semis. Let's see how overbought the semis are at this point. Fairly overbought. I think that RSI is about a 74. So again, I begin to kind of look at indices and sectors once they get over 70. Stocks can stay overbought for a long time. They could stay in that overbought region, but usually the major indices don't. They usually come off those highs eventually, but super, super strong. I mentioned Apple. Apple did not, touch that psychological 220 level, but maybe this will kind of back and fill a little bit and give another trading opportunity. So I think really strong. What else did I want to go over, anything else? Well, here's our watch list. Well, so here's sectors, first of all, just so that you could see. You've got a couple things. XLK strong, also XLY strong. I think that was part of that had to do with the home builders, which were pretty strong today. They did not close on their highs. They, as TLT kind of gave back. Where's TLT? So right here, like still finished up on the day, but again, same thing. It really gave some of the gains back while Powell was speaking, and so was up about 1.2, 1.3%. Only finished up about 77 basis points. Um, Gold also gave back a lot of gains too. Where was I going next with this? I'm sorry, I lost my train of thought. The home builders, I think. ITB should be in here someplace. I can't see it, so I'm going to search for it. There it is. So yeah, at one point ITB was up, decently above 4%. The home builders up 3.2%. A couple names that because I wasn't going to chase the strength today in home builders. I looked around a little bit because I didn't have any positions in them. I like this BECN. This is a roofing company. Very very strong move. Another one is Lennox. Right. Again, you can kind of look for the best in breed here. I really like that. I mean, that's an amazing candle, right? Sideways, sideways, sideways for since like the middle of May on, and bang, up to new highs. So yeah, this is a more difficult one to play, but I might stick this in the TTG trend portfolio because that's a really nice breakout to new highs there for Lennox International. And again, here's the whole group so that you could kind of just see how much Lennox and the roofing company BECN did, because that's, again, that's a tough looking candle for the day. Also XHB, right? Kind of same thing. XHB has more retail in it. XLY is here. Not as so closing right at the top of the value area. So again, not as nice as what tech is doing and what the semis are doing, But I think there's names that are outperforming. There's names that you can kind of look at, and we've talked about some of that strength in retail the last couple days. Also indicating strength, there's the home builders, even though I'm not in love with that candle at the end, how that closed. Biotech is also in there too. We've already mentioned semis and how they're overbought, and software came back strong with Oracle results. And here's how our watch list. I mean, our watch list very, 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 very good to have that many names. Up over 3-4% from the trigger, right? And so very strong, and did take a couple of these trades. Look at, I think, FTAI, which is a name that I covered in I believe in yesterday's video. If not, I did this for members yesterday. But I continue to really like this aerospace group. Really nice move out to new highs. All right, guys, I'm going to leave it there for today's video. I'll try to keep it a little bit short, but overall, I think that there's a lot of exciting things going on. I think today was mostly positive. Again, not everything closed on its highs, but I think that's what we're getting right now. Looking at breadth, which again, I've been giving you this view. I do want to say that, last couple of days I've said, hey, we need to see the new highs expand versus the new lows. They did that, but the new lows actually kind of filled in a little bit more. I think at one point there was only, when I took the snapshot of this at around 12:30 today, there was only 31 new lows. So they did increase more as the day went on versus the new highs, which were right around 70, 78 throughout the session. So I think a lot to build on. I still think you have to be a risk manager in this market, and you got to take some targets into strength, as well as on gap ups. It's not a good recipe for success to chase these gap ups. Again, having these principles about being a net seller, I really help, and my P&L is right around on the highs for this year. So I'm pleased with that very much. Guys, have a great night and see you tomorrow.